CG Oncology Nasdaq. CGON has emerged as one of the most closely watched biotech stocks in 2025, driven by both remarkable price action and strong growth prospects in the cancer therapy space. The stock surged over 33% today to $29.83, with trading volume spiking far above its average, reflecting intense investor interest and momentum. At a $2.7 billion market cap, CGON is now trading near the upper end of its recent range, though still below its 52-week high of $46.99 and well above its low of $14.80. CG Oncology is a late-stage clinical biopharmaceutical company focused on developing bladder-sparing therapies for bladder cancer patients. Its lead candidate, BOND-003, is in Phase 3 trials targeting high-risk, BCG-unresponsive non-muscle invasive bladder cancer, while other programs are in Phase 2 and earlier stages. The company's recent product launches and strategic collaborations have driven a sharp increase in revenue, albeit from a small base. 2024 revenue was $1.14 million, up 158% year-over-year, though losses also widened to $88 million as R&D and operating expenses climbed. Analyst sentiment is strikingly bullish. 10 analysts rate CGON a strong buy, with a consensus 12-month price target of $65.11, representing a potential 191% upside from current levels. Some forecasts even predict 70% annual revenue growth over the next 3 years, reflecting optimism about the company's pipeline and market opportunity. The recent surge was fueled by positive data in bladder cancer and comparisons to Johnson & Johnson's competing therapies, which has brought CGON into the spotlight for institutional and retail investors alike. Technically, CGON has shown strong short-term momentum, gaining over 26% in the past 2 weeks and rising in 9 of the last 10 sessions. Volume has increased alongside price, a classic bullish indicator. There are buy signals from the short-term moving averages in MACD, but the stock is still below its long-term average, which means some technical caution is warranted. If shares break above resistance around $30 in the long-term average at $31.40, it could signal a trend shift to the upside. However, models also forecast that, if momentum fades, the stock could retrace toward the $9-16 range in the next 3 months, so volatility remains high. Financially, CG Oncology is still deeply unprofitable, with negative EPS, $1.41 in no-pay ratio. As is typical for early-stage biotech firms, the company is burning cash to fund its clinical trials and commercialization efforts, so future capital raises are possible. However, gross margins have improved and product sales are ramping up, which could help narrow losses if approvals and adoption continue. In summary, CG Oncology offers high risk and high reward. The company